Hey guys, Max here, and this is your daily market update for yesterday, the 14th of July. And as you can see from the heat map behind me, it wasn't a brilliant day, but it really wasn't awful either. Tech companies, for the most part, performed okay, with the Nasdaq rising by 0.3% for the day, whereas the rest of the markets, financials, industrials, energy, basic materials, stuff like that, did fall for the most part. As a result of that, the S&P 500 on the whole fell by 0.3% and the Dow Jones fell by 0.5%. As for the rest of the world, it was a fair bit worse. As you can see, red across the board, with only a few companies, most of them being microchip semiconductor firms like Taiwan Semiconductor, actually performing well. Pretty much everything else was red for the day. China was particularly bad because we got some brief news out of China that Alibaba is being targeted by the Communist Party once again under another regulatory crackdown. As I've told you time and time before, these crackdowns will never end because they are integral to how the Communist Party functions. In the rest of the world, it's your standard recession fears, inflation fears, poor business earnings and business environment and monetary tightening fears that basically just led to a rout across the board. The FTSE 100 then fell by 1.6% for the day, and the Stock 600 fell by 1.5%, with the MSCI World Index falling by 0.8%. As for currencies, well, once again, we saw the exact same thing that we've seen for weeks on end. As equities fall, the dollar strengthens, this time by about 0.6% against its peers. The euro fell by about 0.5% and is back down at parity as I speak. The pound fell about 0.5% as well and is down at $1.18 each. And then the Japanese yen fell by over 1% and is now fallen to 139 yen per dollar, which is really pretty damn low. As for fixed income assets, we actually saw yields rise and prices fall, which is a little bit counterintuitive and not what we've seen over recent weeks. The US 10-year Treasury yield rose by 4 basis points to 2.97%, again hovering near that 3% mark, while the German 10-year yield rose by 3 basis points and the British by 4. Finally then, to finish off for traditional markets, what happened with oil prices? Well, they stayed pretty low, not really low, but lower than where they have been in recent months. WTI crude oil is still sitting at $96 a barrel, and Brent crude is still sitting at around about 100. And Brent crude is still sitting at around about $100, whereas gold prices fell by about 1.6% and they bottomed out at around $1,700 an ounce, a far, far lower figure than we've seen over recent months. As for crypto, well, we actually had quite a strong day for crypto assets, with most of them rising on the whole. Bitcoin up by 5%, touching $21,000. Ethereum up by 12%, above $1,200, and most altcoins rising by about 5% on average for the day. So really quite a strong day for crypto for once. Now, why did this happen? Well, there are a few different pieces of news, but most of them are a little bit inconsequential. For example, the New York Yankees are going to allow their athletes to be paid in part in Bitcoin. To be perfectly honest, no, the people on Reddit telling you that this is why Bitcoin rose for the day are wrong. This is entirely a gimmick. Hardly any of these athletes will take this payment, and those that do will probably go on to regret it. We also got news from OpenSea, the largest NFT marketplace around in the world, to be honest. Well, they're cutting 20% of their staff. That's not really good news either. We did get a little bit of news out of Circle, the company that puts out USDC, which is turning into the biggest stablecoin in the world, and it is far more trusted than Tether, even if it isn't necessarily perfect. Well, they came out and fully disclosed their reserves for the stablecoin, and so that's really good news, right? It is fully backed by basically US Treasury bills or by dollars themselves, which is incredibly reliable, except the only problem here is that this hasn't been independently audited, so we're just taking them at their word. And so no, this probably isn't the reason for the bullish crypto market action either. In reality, the reason that crypto was up for the day was probably a little bit of just investor sentiment moving back and forward, as it so often does, but also news from the SEC that they might make cryptocurrency and firms that operate within that sphere exempt from certain regulations which usually apply to securities. Basically, it would just make it a little bit easier for them to work and operate, and this is seen as a positive sign from the SEC that they're looking favorably upon crypto to try and regulate it in a way that allows it to thrive into the future. That's probably why we saw crypto rise. Now, we had quite a bit of news regarding banks and financial companies for yesterday. In particular, we had earnings from two of the biggest banks in the world. The first is, of course, JP Morgan Chase. It's a very important company to look at because it's seen as a bellwether not only for the financial market and financial industries, but also for the rest of the economy as well. So everyone was watching. and they didn't do very well. Their earnings fell by 28% and their share price dropped by 5% pretty much instantly as well. Now, Jamie Dimon, their longtime CEO, who's basically an institution himself, he came out and spoke quite a bit, and we will cover this in a full video probably tomorrow. But for now, what did he have to say? Well, he said geopolitical tension, high inflation, waning consumer confidence, the uncertainty about how high rates have to go, and the never before seen quantitative tightening and their efforts on global liquidity, combined with the war in Ukraine and its harmful effect on global energy and food prices, are very likely to have negative consequences on the global economy sometime down the road. In short, he thinks the economy is in a bad state and it's probably going to go into a recession. This is going to impact the company and its earnings, and actually it already has. Now, JP Morgan is actually being a little bit sensible here, which is a little bit hard for me to say. They're no longer doing any more share buybacks because they need their cash in their bank accounts in case a recession comes and eats away at their reserves to make sure that they are adequately capitalized, which is good to hear. That does sound like a bank being responsible, and it's pretty rare. As a result of this, a lot of people are billing this earnings miss as not awful because it's sort of as a result of the bank just being a little bit conservative, but it is still bad. Now, we also got news and an earnings report out from Morgan Stanley, another one of the biggest banks in the world. And what did we see there? Well, almost the exact same thing. They saw their earnings fall by 30% year over year, and their share price also fell by 5%. Now, they are blaming this on a couple of different things, in particular, a big reduction in the number of new listings on the stock market, from which companies like Morgan Stanley profit a great deal. Basically, there are less IPOs, there are less SPACs going about because the monetary environment is tightening, and so there's less profit for these financial firms that deal with them. They're also expecting a massive fine. From their own words, it said it would be impacted by $200 million worth of related to a specific regulatory matter concerning the use of unapproved personal devices and the firm's record-keeping equipments. Basically, they're in trouble for not storing data in an adequately safe manner, and they're expecting a further $200 million fine into the future, which is going to hurt their earnings further. The last bank we're going to talk about today is Bank of America, who we haven't actually seen the earnings from them come out yet. It comes out in 3 days, I believe, but they do have a big problem, very similar to what Morgan Stanley have. They're going to be fined $225 million for a massive problem where they froze customers' accounts throughout the pandemic. What exactly happened? Well, this paragraph summarizes it pretty well. Taxpayers relied on banks to distribute needed funds to families and small businesses to rescue the economy from collapse when the pandemic hit. Bank of America failed to live up to its legal obligations, and when it got overwhelmed, instead of stepping up, it stepped back. Basically, they made a bunch of mistakes and it hurt their customers. Their customers didn't find themselves with the money that they were owed by the government, and then they tried to hide their mistakes and they denied accountability. So they're going to be fined by $225 million, and this will impact their earnings, which will probably not be stellar when they come out in a few days' time. Really, this has been quite a bad day for banks so far. Finally, then, the last thing to talk about today is regarding Russia and oil and the petrodollar. And I know that a bunch of people will be interested by this. So if you want a full video going into this issue in particular, then please let me know in the comments down below and I will tackle it in a full video probably tomorrow at some point. Now, what exactly is going on? Well, Russia is planning a new national oil trading platform to get around Western sanctions. Now, this isn't a new idea. Russia's been trying to do this for decades now, but they haven't been successful. They've failed at every opportunity up to this point. But now with the war in Ukraine and the massive amount of sanctions that Russia is facing, and the fact that the West is basically plotting against Russia to try and make it as difficult as possible for them to sell their oil, well, they're far more motivated this way round, so they could actually see some success here. Now, with commodities, there are basically quality and type standards, which we tend to call benchmarks. Think of WTI, West Texas Intermediate crude oil, and Brent crude oil, which are basically just benchmark standards of commodities that you can use to price your commodity. Russia wants its own benchmark of oil that it controls in its entirety so that they can try and get away from Western sanctions. Now, is this the end of the US dollar? Is it the end of the petrodollar? Is this the end of the US dollar as the world reserve currency? No, this is the start, but this process is going to take over 100 years, and we will probably all be dead when that time actually comes. The simple truth is that everyone loves the idea of the dollar dying, but it just isn't going to happen within the next few decades. We saw the same thing really a few months ago when it came out that Saudi Arabia was selling oil to various different countries using different currencies. But back then it was just a gimmick, and this is probably going to turn out to be about as influential as that as well. I do hate to be a downer on those who are rooting for the failure of the US dollar, because I understand that point of view, but the truth is that it's just not going to happen anytime soon. This probably won't amount to much. Russia may get a couple of countries like Kazakhstan to work with them to actually use this, but every other country in the world will continue to use traditional benchmarks and processes, because standards exist for a reason, and having them internationally recognized is incredibly important, as opposed to using a standard that the Russian state sets and that it may just be a little bit unreliable with. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Also, make sure to check out the link in the description to Masterworks. It can help you protect your portfolio against market turmoil through fractional shares of art from world famous artists. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week. There's also a link in the description to I Trust Capital, which helps you to invest in crypto through your tax-advantaged IRA, which could literally save you thousands. If you, like me, think crypto going down is a buy-in opportunity, then now is the perfect time to join I Trust Capital. Thank you all for watching. Stay stoic. Until next time.